Hello, ladies and gentlemen. I hope you're fine wherever you are. I am the Acca tutor, Mr. J. Tim Clue, and am I'm very happy to have you back in this particular lecture where I will be taking you through the concept of linear programming. Okay, so far we have covered two important topics in our limiting factor analysis uh, theory. Okay, now we then have to cement our understanding of the limiting factor theory by looking at linear programming. Okay, but one thing I also want to point out is that all of these are just an expansion of the marginal costing concept. Okay, you would see that for us to perform a realistic or a meaningful linear programming, we then have to use the concept of the maximization of the contribution margin as our uh, objective function, okay, or the maximization of the net present value. So in this case, we are only likely to be using the maximization of contribution margin as our objective. Why? Because um, we are at management accounting level, or at we are looking at the production side of things. We are not really focused on the investment side or the long-term side. Okay, we want decisions which are only going to be useful in the short to medium term. Okay, so we are only going to be focused on the maximization of the contribution margin as our objective. So in linear programming, like in any scenario or in any case or in any topic, you are also going to be given a scenario in the examination, and it is your task to ensure you have done the programming very well. Otherwise, you are going to fail the question. So here are the few highlights I want you guys to take note. Linear programming is useful in making decisions involving multiple factors. For example, resource allocation, production planning, and supply chain or network design. If a scenario contains two or more limiting factors, linear programming should be used to determine the contribution maximizing or cost minimizing solution. If you still remember, in our previous two topics, or let me just say in the previous topic on limiting factor analysis the traditional way, we were looking at only one constraint as part of the constraints to be considered. So only one constraint was given in the question, and we're then required to come up with a viable production plan, taking that constraint into consideration. But in this case, you are going to be given more than one. That is two or more limiting factors to consider. Okay, but for you to perform this linear programming, you then are not going to be given more than two products, and you also need two and not one product for you to perform a linear programming, especially graphically. Okay, so graphically you will need two products to be available or for consideration, and you then not require more than two. Why? Because it then becomes impossible to do the graphical method using your human power. You then have to be you'll be required to use sophisticated computer software to do that. So it will become very, very impossible. So you'll be given two products and some limiting factors to consider for you to come up with the linear equations. Now, for you to then do or to come up with a linear program, you then have to define the problem. Okay, so that's your first task. Define the problem. How do you define the problem? You first have to have what are called decision variables. Decision variables are the quantities of products or resources which require optimization. Which products are we talking about? You need to know those products which have to be considered. Then you also need to know the constraints which are affecting the success of that business department or the success of the products on the market. What are the constraints? What are the limitations the business is facing? Okay, these could be issues to do with the resources. All right, maybe the labor resource is very difficult to get, or maybe the machine hours are difficult because of electricity problems and so forth, or something that is linked to capacity, maybe in terms of the energy power, we cannot manufacture certain quantities, or maybe because of the legislation, we are required to operate up to this capacity and so forth. Then the objective function. This is actually the main idea of the programming, of the linear program. This represents the decision maker's objective, and the objectives could be either the maximizing of profit or the minimizing of costs. And you can as well see that we are still expanding on the relevant costing theory. Okay, because we say that relevant costing is relevant in the maximizing of profit as well as in the minimizing of costs as well as the maximizing of profits or revenues. Okay, now you are going to meet terms like the feasible region. So here we are now in the graphical context. Okay, you'll be given a graph and you might be required to identify the feasible region. Okay, now the feasible region is the set of feasible solutions to the linear programming problem, that is, solutions that satisfy all constraints. Excuse me. The goal of linear programming is to identify the optimum solution within the feasible region. Okay, so let me just try to draw this for you. Okay, ladies and gentlemen, this is our graph. Like I said, the graph will be considering two products, so we might be having product P and product, so this is P1 and product P2. Okay, these are the products which have to be considered, and then you will be given information, say, of the maximum demand for product P2, which could be 230 units. Okay, and then you will be told of, say, the maximum demand for product P1, which could be 500 units. Okay, then you will be told of the constraints which impact the success of these two products. And the first one could be the issue related to, say, constraint B. Constraint B, it could maybe labor hours. Okay, that's constraint B. You can also be then told of a particular limiting factor, okay, which is maybe limiting factor C. This limiting factor could be material. Okay, so the examiner then says, can you please identify the feasible region? The feasible region is any portion within this region This is our feasible region given the two constraints. Okay, so you might give this is point 0, this is point A, this is point this is point B, this is point C. Okay, so our feasible region, the feasible region will be O, A, B, and C. So what does it mean? It means that if you produce anything with the combination of A and the combination of P1 and P2 within this region, you are not going to be wrong. Okay, you are still going to have a positive contribution. But our idea is to maximize, not to have any contribution, but to maximize the contribution margin. So this is why you see that companies require managers to meet certain targets. They don't simply want a positive profit, but they want a certain positive profit. Okay, so the objective is to maximize. So which means the idea is to move from point 0 going upwards there, because we do not want to produce anywhere nearer to 0, but we need to move outwards. We need to achieve the highest contribution margin possible. But in the course of this theory of linear programming, there is an animal called the ISO contribution line. Usually, the examiner is going to give you this contribution line. This is the optimal solution to a linear programming problem can be found by sliding the ISO contribution line up. Okay, usually we need to move the line away from the origin until it leaves the feasible area at the intersection of two time constraints. So the objective is to have the ISO contribution line moving outwards from 0, as I've already indicated by those blue arrows. Okay, but what is this ISO contribution line? The ISO contribution line is something like this. It is a dotted line that crosses through the feasible region. Okay, what it tells is that any combination of products which are going, let's say this combination here, the combination of this point and that point is going to yield the similar, a similar contribution margin. So which means if we draw another parallel ISO contribution line here, we are still going using this combination, this point, the combination of this point and this one, we are still going to find a similar contribution. Okay, so the objective is to maximize profit or contribution. This means that we need to slide further these ISO contribution lines until they reach a point where there is an optimal contribution point. And this is the point where the two constraints meet at the end of the, so we had ignored this particular point. Let us call this point D. It's also part of the feasibility, the feasible region. So we need to put a D here. Okay. So that's where the two constraints meet, and that's where we have got our maximum. If we produce a combination of P1 and P2, that is P1, P2 starts from here up, it is going to that point, and A is somewhere here. So the amount of A could be Okay, so you can see that if we manufacture with this particular combination, if we manufacture P1, that is 400 units of P1 and 40 units of P2, we are going to achieve our contribution. So this means that the objective function should be C is equal to P1 480 plus P2 40. That's our objective function. Okay. Let's now see if there is still another term we need to discuss about. Okay. Um, yes, there is the concept of shadow prices, and this is also one of the important concepts we need to worry about in this particular paper, the Acca paper, performance management, because uh, these shadow prices are going to hound us as we proceed with our course. Okay, now, what is a shadow price? This is the extra contribution or profit that may be earned if one more unit of a binding resource or limiting factor becomes available. So if initially we would have been told that the limiting factor was labor, okay, let's say the labor was 800, okay, 800 hours, and we're told that we cannot exceed that much. But now, what if we are then told that 1 unit of, 20 more units of labor are available? What is going to be the contribution? For us to arrive at that, we need to determine the shadow price. And the shadow price would not be looking at the whole 20 hours available, but on the 1 hour. It only considers what is the impact, what could be the impact of the 1 hour added. So we'll then have to recount or to redo our computation with the 800 plus 1 hour, which becomes 801 hours. And we then have to determine the change in contribution if that 1 extra hour is added. So that contribution or that additional contribution margin is what is called the shadow price. This will assist managers to determine if it is something worthwhile to add the additional hours or not. Okay, so we are going to go through a past exam question that is from cut and stitch question. This is a past Acca examination, performance management exam question, which we need to learn something from. Okay, so let's do it. Don't want my face to disturb you guys. Okay. Um, cut and stitch, that is CS, make two types of suits using skilled tailors. That's the labor variable. Okay, here the examiner is trying to show you that this is the labor variable uh, representing the skilled tailors, and a delicate and unique fabric material. Both the tailors and the fabric are in short supply. So the other variable or the other resource is material. And both of these resources are in short supply. And so the accountant at CS has correctly produced a linear programming model to help decide the optimal production mix. The model is as follows. we've got variables. Here we are now defining the variables, okay? And this has been done for us by the accountant, but I just want to take you through as I have already explained. So we need to define the variables, that is, which products are we looking at or which resources are we looking at. So let W in the linear program or in the linear equation, let W be equal to the number of work suits produced. Okay, W will represent the quantities of products to be produced, and in this case, this is the work suits. Okay, the work suits to be produced, and let L be equal to the number of launch suits produced. So L represents the number of launch suits produced. And I've already indicated that the variables we are talking about are the quantities of goods to be produced. Okay, now that we have identified the variables, let us now consider the constraints. Why? Because we are not operating in a utopia. The resources are constrained. Okay, we cannot produce as much as we want. Remember, we need to consider the issue of capacity, uh, uh, the issue of demand, all those things. Okay, so our production, the production is limited. It is limited by what? By these guys. Okay, those are the limitations. So the first limitation we are going to look at is the tailor's time. These guys, they work within agreed hours. Okay, so by so doing, it means that we are not going to utilize them anyhow. They've got their limitation. So taking their limitations, or that is the hours limitation, it means that we are going to operate at 7W plus 5L is less than or equal to 3,500 hours. So the combination of 7 work suits plus 5 launch suits is only going to be met within 3,500 hours. Okay. Then, what about the fabric? Remember, the fabric here in this case, this is the material we are going to use to produce the work suits and so forth. So we need to consider the amount of meters available. So we then have to have a combination of 2 work suits and 2 launch suits to be equal to, to be less than or equal to 1,200 meters. We cannot exceed that. So in the diagram, if we go to the diagram, the line T is going to be shown here. The line T is this one. This is the line T. And the line F represents the fabric. And you can see that those are the constraints. And you can refer back to my diagram on the direction of constraints. Okay? Then, production of work suits. W is less than or equal to 400. This is the line P on the diagram. So this simply means that all work suits produced should be less than or equal to 400, meaning that we cannot exceed 400. So this means that the 400 represents the demand for them. So demand is also another factor to be considered as a limiting factor. So this is the line P we are talking about. Okay, the examiner has actually indicated it with a D as a tip there, although that D is representing what we call the feasible region. This is the feasible region. Sorry. Okay, I'm not a good artist. Okay, so that's the feasible region, or A, B, C, D. Okay, or A, B, C, D. Okay, now we are also told that the optimal point is the point B, and we say that this is the point where the two time constraints meet. Okay, so the point at which the T constraint and the F constraint meet on the feasible region. What else shall we read? There is also what is called the objective function. The objective function is only going to be met if we make 48 work suits plus 4 launch suits. That's the objective function. That's the point at which we are going to maximize the contribution. Okay, we've spoken about A, B, C, D, that is the feasible region. Okay, and B was determined as the optimal point. So what's the big deal? It seems like we have done everything. So what's the big deal here? We are not yet done. Required. These are the requirements, ladies and gentlemen. A. Find by appropriate calculation the optimal production mix and related maximum contribution that could be earned by CS. Remember, CS is the company. Okay, and I encourage students to utilize the Acca practice platform for you to do this, or to be able to do this. Okay, we can as well use Excel for presentation, but I'm just going to do this manually. Okay, so that you grasp the concept, and then you need to practice using Excel, because you might be given the Excel spreadsheet as part of your platform to use in answering the question in the exam. Remember, you're now doing the CBE. You're now doing examinations in a computer-based environment. So you need to be able to utilize computers in answering these questions. All right, so I'm going to use the manual blackboard to illustrate all the computations required. So please, okay, don't be paranoid or don't be annoyed. We are together in this war. Okay, so let's do the computation. We now have the background, now understanding what this this linear programming is all about, and we are ready to go. We are now fully charged. Okay, please smile for me. Just say hi, Twitter. You're so wonderful. And if you enjoyed this, please subscribe. Please click the notification bell. Please like and share your comments. Input your comments just below this video. If you have got some complaints, maybe on grammar or anything else you feel like it's so annoying and disappointing, please just let me know so that I improve. If you do not complain, I'll just continue to sit on my laurels thinking that everything is going fine when it is not. Because remember, I need more subscribers for this channel to remain viable. Otherwise, if you guys don't subscribe to the channel, then it will close down. I would have no power to continue. Okay, so guys, share the video, subscribe to the channel, and click the notification bell and like it so that it will be optimized. Let us Okay, so guys, before we jump into the computations, I just want to bring this point on board. Linear programming is a philosophy that is within many disciplines, be it chemistry, mathematics, computer science, and so forth. All those guys are using linear programming and they are very good at it. We are accountants. We are not mathematicians. So the principle of maximizing of contribution margin is something that is known in the accounting field and not in the mathematics field. In the mathematics field, they only know of profit. Okay, so now this is the thing. Our objective function has been determined to be what? This was determined to be C is equal to C is equal to 48W plus 4L. That's the contribution maximizing function. Okay, now we are required on part A to calculate the optimal production mix and related maximum contribution that could be earned by CS. Now, for us to arrive at this particular function, we need to consider the constraints. So it is from the equations of constraints that we are going to achieve the desired objective. So we need to consider the constraints. However, when we were defining the problem, we left certain values so that we limit our scope to reality. When we were defining the constraints, we also failed to define the levels of these unknowns. All right, so both W and L should be greater than, okay, should be greater than or equal to 0. Why did I say so? Or why do I say so? This is because we cannot manufacture -1 worksuit. No, we can't manufacture negative worksuits. It's either we manufacture 0 or 1 or 2 and so forth. Okay, please bear with me here. Bear with me. I had forgotten about that part. Now, our constraints, these are the constraints, okay? These are the two main equations which we are going to employ. So equation number 1, that's 7W plus 5L. Seven W plus 5L is less than or equal to 3,500. Equation number 2 is 2W plus 2L. 2W plus 2L is less than or equal to 1,200. So we have been playing around simultaneous equations, and this is the time we need to use that knowledge to help us come up with a viable production plan. So whether you're going to use the substitution method or the elimination method, that's your own business. The examiner simply wants you to show him or her that you have done something linked to simultaneous equations. Are we together? Okay, so do not waste time in the examination trying to show them that you are still a mathematician. No, you're not a mathematician. They are training you to become an accountant. All right, so Now let's solve for L first. Okay, we need to solve for L. How are we going to solve for L? First of all, we then have to make sure that the W side becomes 0. Okay, the W side becomes 0. How can the W side become 0? We need to change, to multiply this equation. We need to multiply that equation by, say, 2.5. Okay, we need to multiply that equation by 2.5. So here is we need. So if we multiply by 2.5, then this particular equation will come here to become, this one. Okay, the second equation becomes 5W plus 5L is less than or equal to 2.5 multiplied by 1.2. What is that? Let me use my calculator here. Okay, that's 3,000. And now we then proceed to say, you can underline here and say, what is the difference between equation 1? Okay, so equation 1 and 3. The difference between 1 minus 3. Equation 1 minus 3. Equation 1 has 7W. Equation 3 has 5W now. So 7W minus 5W, this gives 2W. Then 5L minus 5L, this will leave us with a 0 is less than or equal to 3.5 minus 3,000, that's 500. This means 2W is less than or equal to 500. W is less than or equal to 250. So now that we have got the value for W, let us find L. We use again the first equation. Equation number 1 has got 7W, but now W is now 250. Okay, plus 5L is less than or equal to 3,500. 7 multiplied by 250. Let me use my calculator here. 7 multiplied by 250. That's 1,750 plus 5L is less than or equal to 3.5. 5L is less than or equal to 3.5 minus 1750. 5L is less than or equal to 3.5 minus 1750. This gives us 1750. L is less than or equal to 1750 divided by 5. This gives us L is equal to 350. So we now have the values for W and L. This is the two combination. The combination we needed. These are the two values for the combination we needed. So our objective function is now C is equal to, we know that originally it was C is equal to 48W plus 4L, if I'm not mistaken. Yes. Therefore, C is equal to 48 multiplied by W, which is 250, plus 40 multiplied by 350, and this should give us 48, 48 multiplied by 250 plus 40 multiplied by 350. This means that this gives us $26,000 as the contribution. Okay, so to answer the first part of the question, this was the maximum contribution, that could be earned, which is $26,000. And we have determined that the production mix requires that is 250. Is it 250? Yes, 250 of work suits, 250 work suits, and 350 lounge suits. Okay. Excuse me. Lounge suits. 350 lounge suits and 250 work suits. That combination will give us the maximum contribution of 26,000. So we are done with the first part. Let us now talk of the second part that talks of the shadow price. And I say that a shadow price is that extra contribution we are going to get if we add 1 unit of a scarce resource. Okay, so here we are given, we need to determine the shadow prices if each of the resources in short supply are added. For example, the fabric per meter or the tailor time per hour. If we add 1 extra meter or if we add 1 extra hour, what is going to happen to the contribution margin? And that excess is what is called the shadow price. Okay, so let us do that computation now. Okay, sometimes my machine sticks. Okay, ladies and gentlemen, we have these foundational workings which we have done, and they are going to help us in the computation of the shadow price. And in Excel, you would see that these computations were actually going to be very useful because we would just be copying and pasting to the answer. Okay, the issue is, let us just say part B, shadow prices. Let's start with the fabric. You guys are going to do the labor hour shadow price on your own. Okay, you just have to follow the principle I have indicated here. So we have got our two foundational equations, or let me just say the equations of the constraints, and we had 7W plus 5L. 7W plus 5L was less than or equal to 3,500. Okay, and we had 2W plus 2L was equal to or less than 1,200. Okay, but in this case, we want to use or to have the fabric per meter added. I mean, a meter of a fabric added or is now available. Okay, so it means that the constraint has been the constraint related to meters to fabrics. Remember the original equation from the question the original equation for fabrics was this one. Okay, this was the fabric equation. All right, so it means that we are going to add uh, 1 meter to the constraint, to the original constraint. The original constraint was 2W plus 2L is less than or equal to 1.2. So we will come here and say, all right, so this one was 4 hours. I had mistaken here. So this is the constraint we need to adjust. So it means that we are going to say here plus 1, okay? Because we want to see what will happen to the ultimate contribution. Is the 26,000 going to change if we add 1 extra unit of a fabric? Okay, originally it was the original equation was this one, but now it has become, the new equation is now this one. Okay, so we just do the same thing as we did before. Okay, we will label our equations for organization purposes, for us to be organized. We're going to say, sorry, I'm rubbing and back and forth. So this is equation 1, this is equation number 2. So we want equation number 3. We'll do the same. Okay, equation 3. We are going to multiply equation 2 by 2.5. So equation 3 will be, this is equation 3. We want to change equation 2 to equation 3. So if we multiply by 2.5, it becomes 5W plus 5L is less than or equal to, let us multiply that, 1201 multiply by 2.5, it becomes 3002.5. Okay, so we then say equation 1 minus equation 3. This becomes 2W plus 0 is less than or equal to 3.5 minus 3002.5. That's 497.5. In this case, W is less than or equal to 995. Okay, it's not 995, it's 248.75. You come back here and solve for L. Let's solve for L. Okay, if we solve for L, it means that 7W, no need to repeat the W again, because in the exam we don't have that time. So it's now 7 multiplied by 248.75 plus 5L is less than or equal to 3.5. So this multiplied by 7 gives us 1741.25 plus 5L is less than or equal to 3,500. 5L is less than or equal to 3,500 minus 1741. That's 1758.75. Okay, what is L? L is less than or equal to 1758.75 divided by 5. L becomes 351.75. So the objective function was C is equal to 48W plus 4L. This will become 48 multiplied by 248.75 plus 40 multiplied by 351.75. This gives us, so this gives us 26,010. Okay, 26,010. So the shadow price is equal to the original 26,000, excuse me, it's rather the difference. That is the new price of the new contribution of 26,000 and